What's up, y'all? Today we're gonna go over how to come up during a market crash and how to stay prepped and ready for the next one. The market this year, 2025, has been crazy volatile and very hard to predict, but knowing how to read chart patterns can give you an edge. Using 2022 market crash as an indicator, we could find similarities in the rise and the fall of the S&P 500 happening in a faster time period. This is called the Elliott wave theory, but all that shit is confusing, and we're not gonna get into that. Just remember this: history doesn't repeat itself, but it tends to rhyme. Meaning, the prices are obviously gonna be different of the stock, but their chart patterns, the line on that graph is gonna look pretty similar, and it'll show you signals for what to expect in the future. For today, we're going to use ETF VOO as an example. So early 2025, the highs and the lows, if you match them up with 2022 before the crash, you could make a prediction. So personally, I had target price of 480. The market had dropped way below 480. I think like 460. I think we hit a 450, and that was a huge buy opportunity. Now I get it, that probably did sound super confusing, and learning to read a chart is probably not something you want to do, and you might have already clicked off this video just hearing about I gotta learn how to read a chart. Fuck that. So we could just automate the entire process, so you could just win anytime, no matter what. And I know you know what I'm gonna say. It's dollar cost average, but there's a little better way to do it, which I call the double dip method. So let's lay out an example. First, let's take SPLG. It's a similar ETF to VOO. They track the S&P 500. Only difference is SPLG is like $70 per share compared to VOO, which is like $560 per share. So it tracks the same thing, but it costs less, meaning you could use less money to lower your average price. Say you only have $100 and the price of VOO went down, you're not going to be able to lower your average price with the $100 as much as you could with SPLG. If you get what I'm saying. So next step would be setting up a recurring investment through your brokerage, and finding a number you're comfortable spending and all that good stuff. Now, this only really works during market conditions like we had this year. If you're gonna try this on a daily basis, it'll work. It's just gonna be annoying. So obviously, market tensions early 2025. Everything's in the news. You can see the charts. I mean, it's sky high. It's pretty clear there's going to be a big drop soon. So that's when you tend to start, scaling back the investment. I wouldn't say stop it altogether unless, you're not able to afford it. Once that share price starts to fall, then it's go big or go home. You want to double up on whatever amount you were buying. You want to go crazy. If you're able to invest lump sums along with your dollar cost average to increase your profits. Now you're probably thinking, okay, why do I got to do all this? I can just wait for the bottom and then make a big buy, right? Well, how do you know when the bottom is? What are you, a magician? I'm not. I don't know when the bottom is. If you do, tell me. Just stick to dollar cost averaging. Double up during crashes and large dips. Make lump sums if you're able to afford it. And once the market corrects itself, which surprisingly it did within a few months this year, but this year is insane. But I mean, the method works because I'm up 20% in the past year. I'm beating the S&P 500 by like roughly 10 points. I hope that made sense. I hope you guys like this video. I plan on making more. I want to share a lot more stock advice. I hope you guys enjoyed. Thank you.